So we'll be taking a look at some of the Chapter 14 problems found at the end of the chapter, and some of them will correlate directly to your Connect assignment. I have, as I usually do, altered the data in some of these problems, but I'll walk through some of them to show you how to resolve some of these problems and calculate the final solution. Alright, so let's look first at problem number 48, and 48 is found on page 14-38. So Denise contributes the following assets to a partnership for a 25% stake or interest in the partnership, and they give us the fair market value and the basis. I changed the value of the basis they gave us here from 20,000 to 22,000. Office equipment, all the rest of the data remain the same. So what is Denise's beginning basis then in this partnership? Well, in this case we would add the total of the 22,000, the 5,000, and the 6,000 for the cash, office equipment, and the auto. Again, just the basis we would sum together, and that gives $33,000, which is the amount of her initial basis. Number 50, and this is found on page 14-39 in the middle of the page. This is one of your Connect assignments. Again, I've altered the data in light green there. We have three folks forming a partnership. Dennis and Susie contribute property, but Catherine agrees to perform services in exchange, so she will have to report this as a gain because she is getting a capital asset, that is ownership interest in the partnership, by providing services. So what is the value then of this guaranteed payment for Susie? Well, it'll be the addition of the sum of the two fair market values of the property given by Dennis and Susie times her 10% ownership interest, or $20,000. And jumping down to part C, what is the basis to the partnership of each asset? Well, if we look and break out the two assets, they're going to just be brought in at the basis of the contributing partner. So as we talked about in the PowerPoint video, the partnership steps into the shoes of the partner and would assume their basis. So for number 54, Wade's beginning basis in the partnership is, using my number, my altered value of 24,000. The problem has 23. And then we're going to bring in the ordinary income, the 43,000. We have a guaranteed payment of 12,000. This is a separately stated item that would be reported on Schedule E. And then we bring in the long-term capital gain of 15,005. That too is a separately stated item on K1 and would be reported by the partner on Schedule D, as in dog. And then the Section 1231 gain is also a separately stated item, also on Schedule D. Charitable contributions would be separately stated on Schedule A if the partner itemizes deductions. And then the Section 179 expense is also a separately stated item, as we discussed in the PowerPoint video. And we have 18,000 on this expense. Alright, so these are going to reduce then the taxable income of the partner. So Wade's self-employment income then would be the total of the ordinary income plus the guaranteed payment, plus finally the Section 179 expense, which is a negative 18,000. So you wind up with Wade's Schedule E, or self-employment income, of 37,000. And this formula is found in table 14-2 on page 1415. Finally, what is Wade's basis then in the partnership as of the end of the year? Well, here what we're going to want to do is we're going to really add the beginning basis, of course, and then we're going to add the ordinary income, and we'll add in the long-term capital gain and the Section 1231, and then the charitable contributions as a negative value, and then the cash distribution as a negative value as well. Once we net all those together, then we wind up with 60,800. This is table 14-3 on page 1416, excuse me. All right, next problem we can discuss then. I'd like to jump down to so for problem 56, we have this is found on page 1441. Kim has a basis interest of $12,000 when she receives a distribution from the partnership of $6,000 cash, which I changed to $7,000 cash on my data. Also, equipment with a basis of $8,000, $12,000 fair market value. So I just entered the data given with one alteration. Question is, first of all, Kim's adjusted basis after the cash distribution will be Kim's basis in the partnership at the time of the distribution, and then we would deduct the cash distribution of, in my case, $7,000, and that goes down to $5,000. Now the next question is, when we look at Kim's gain on the distribution, that Kim recognizes no gain on the distribution in this case. Since there's no gain recognized, on the distribution, then Kim's has zero ending basis, because and essentially Kim is liquidated after the distributions. Kim has liquidated her interest in this partnership. And we, as you know, we can't drop the partnership basis below zero. Kim's basis in the equipment, as we talked about earlier, is going to be $5,000, and that $5,000 then is equal to Kim's adjusted basis after the cash distribution, because she can't have any more basis than she had at the time she left the partnership, which in this case is $5,000. Alright, let's take a look at a multiple choice question, number 27. This one was an assigned problem in Connect on the bottom of page 1434 for those following along. Billy contributes land with a fair market value of $7,000, a basis of $3,000. In return for 5% ownership interest in the partnership, Billy's basis in the partnership is. So if we look at number 27, I did change the basis of the land contributed by Billy to $2,800 rather than $3,000. 5% ownership interest, so what is Billy's basis in the partnership? Well, it would be the basis of the land contributed, or $2,800. And finally, multiple choice number 47. And number 47 is found on page 14-38. On November 1st, Ashton sells her interest in XYZ partnership to Wayne for $200,000 cash and a release of liability of $30,000. Ashton's basis at the beginning of the year was $125,000, including the $30,000 liability. Ashton's share of income through November 1st was $45,000, and she received $15,000 of a cash distribution earlier in the year. What are the tax consequences to Ashton for the sale of the partnership interest? Well, first of all, what I did, and I'm just going to reformat this a little bit to make it easier to see. Alright, so we have amount of cash received was, I changed it to $203,000. The amount of debt forgiveness was $30,000, so the total amount received by Ashton was $233,000, the total of the relief of debt and the cash received. So that's the amount received. Ashton's basis in the partnership at the beginning of the year is given at $125,000. So what is Ashton's basis at the point of sale? So we need to make some adjustments, and we're going to start with Ashton's basis at the beginning of the year of $125,000, and we'll add to that Ashton's share of the income of $45,000, right? Because Ashton has to pay tax on that income. That therefore it increases the basis for Ashton. And then finally we're going to deduct Ashton's distribution of $15,000, because that's a liquidation of an ownership interest that reduces basis. So we have the adjusted basis at $155,000. Now, what are the tax consequences to Ashton on the sale of the ownership interest in this partnership? Well, we're going to take the total amount of the proceeds, which is $233,000, and then we'll deduct that basis, adjusted basis of $155,000. and that will give us then the capital gain that must be reported on Schedule D of Ashton's Form 1040 of $78,000. Please let me know if you have any questions on these or any of the problems for Chapter 14.